Hey, everybody. Happy Tuesday. Welcome to our pre-market show. I think audio and video should be good to go. All right. So welcome to our pre-market show. Oh, there we go. All right. So let's dive into it. As always, we're going to take a look at the 6 points that I look at every morning before the bell. And today we're actually going to dive a little bit into currencies. So, let's just head on over there. Now, currency flow is one of the points that I'll look at when it comes to understanding the flow of money. I mean, this is literally the flow of money. And when we take a look at a one-day relative performance, by the way, this website is Finviz, Finviz. And you see right there, Finviz. It's a free site. You don't even have to log in. I think it's a terrific site for a number of asset classes, from stocks to futures. I look at relative outperforming lists when I'm building my watch list for futures. I do the same for Forex. And what you'll notice here when you look at this layout is a up-to-date one-day relative performance. Now, yesterday we had this great big sell-off, a lot of panic when the markets are selling off because, well, frankly, traders don't know whether the sell-off is going to continue. They may not be completely, sure why it happened in the first place. I saw two different reasons actually for a lot of folks said that they're pricing in a certain presidential candidate victory. A lot of folks said they forgot the vaccine might be around the corner, and the COVID numbers spiking started sparking fears of another economic lockdown. Here's the thing. It's probably a combination of a lot of things. What I know for sure is that buying begets buying and selling begets selling. My mom has a great saying, and it's not my mom's saying, it's in Bangla. Kota bare kota. That's the Bangla. And what that means is talking just makes for more talking. And it's so true. It's so true. Most things just make for most things. Water is its best diuretic. It just seems to be the way in which nature operates. So at the end of the day, when people go, well, why did it sell off? I said, whatever the reason might have been that sparked that initial fear, after a while, it just feeds on itself. So don't worry about the why. Just worry about what's going to happen, how are you going to capitalize on it. So one of the ways that I want to take the market's temperature, if you will, is look at this one-day relative performance. So let's zoom in here, and I'll show you what I mean. Okay, so what you have here on finviz.com, absolutely free. Just click on Forex and then go to performance. And you'll see that right now we have 2 out of the 3 what's known as COMDOLs, commodity dollars, on the left side of the scale. Normally, I'd like to see this Australian dollar give this whole thing some really nice cohesion, meaning that all the COMDOLs, all the commodity dollars are strong. That typically reflects risk appetite. What is risk appetite? People want to buy the stonks. They want to buy equities. So the other thing that I'd like to see, and neither of those things are happening right now. In fact, it's an odd little pairing right here in the middle of the one-day relative performance, which tells me it's probably sort of a day, right? That's an emotion right there. It's an emoji too, right? So the market's shrugging its shoulders collectively at the moment because the yen, if the COMDOLs are strong, should be weak. It should be on the right side of this relative performance, and the Aussie should be on the left. So what you have here is that should be there, that should be there, and so I don't have that much clarity. One thing I do know, one thing that we did do yesterday is sell dollars. Sell dollars against what? I sold dollars against Canadian dollars yesterday. So that's known as a long dollar, long Canadian dollar, long Canadian dollar, short US dollar position. And the other thing that we did is we actually played the New Zealand dollar against Canadian dollar, New Zealand dollar against Japanese yen. And we also did, we sold US dollar against pound yesterday as well. I believe that was on a 5 or 15 minute time frame. So yeah, there are opportunities to be had. And remember, if you're a futures trader or if you're an ETF trader, let me show you a few ways you can play some of these stories while you're also simultaneously taking advantage of the fact that currency flow will tell you a little bit about what equities are doing. This is not a risk aversion. This is not a freak out mode according to the currencies. We can look at other things, bonds, the VIX. I'm not going to say gold because gold has nothing to do with this conversation. So bond VIX, bonds and gold probably have a little bit more of a relationship because golds move because of real yield. So do yourself a favor. This is something I've been saying for a long time, and I hope that it helps. Gold does not move inverse to the stock market. It is not a safe haven. That is not the way that it works. It's a play on real yields. So I would, if you're going to look at a metal and the equity markets, I would say look at copper. And there are some very interesting copper. We'll do that maybe in one of the upcoming episodes. That reminds me. So I love playing around with new tech. Oh, I just think it's really cool. And one of the things that I'm playing around with, because I don't like email. I really don't. I don't enjoy the medium. There's no immediacy and it's sometimes very drawn out. I like text. I even use an app on my phone called Spike. I don't even know the folks, but I think it's great. And it turns your emails into text. So I'll answer back via text. I'll do that all day long. So I thought, you know what? I got this little, it's called Community. It's a community number. And that's the name of the app. And it's a number. It comes to me. The first one's going to be an auto reply that says, hey, we got your request. And then once it adds you to the community system, it's just a way that I can communicate. That's more like the way I like to communicate, which is text. I think it's quicker and, not as drawn out. So that's literally coming to me, that little number down there. All right. So if you have requests for upcoming shows or symbols or anything you'd like to see us cover during our 20 minutes together every morning, let me know. That's how you do it. All right. Okay, cool. So, hey there. So we start every morning not every morning. Yesterday I had a Forex live trading. But we start at the top of the hour, 9 a.m. Eastern, almost every day. All right. Good morning. Good morning. I see everybody. Oh, got all the regulars. I like it. A few new names. I love it. All right. So let's get to the currency narrative. Why short the US dollar? Because look at the way the dollar's been moving. And even though it had one up day, I'm not going to make too much of that. I really like the idea of that dollar move to the downside. And I want to capitalize on other markets that are behaving a little bit more strongly. New Zealand dollar was one of them. The pound's been iffy, although that's been moving a little bit higher. So currencies, I'm not going to spend too much time on currencies, but the currencies are an interesting way to understand whether or not COMDOLs, Australian dollar, Canadian dollar, New Zealand dollar, or funding currency, think the yen mostly, what side of this scale right here are they on? That's going to tell you a bit about risk appetite. One thing that is a secondary consideration, and this is mostly risk appetite, weak Swiss franc, strong COMDOLs, but the most important two currencies are the yen and the Aussie. And those two are in the middle. So not a great risk appetite, boding well for stocks, bullish for stocks. Not a really clear one, but it's giving us some pretty good indication that, well, at least apparently that sell-off, the bleeding, has stopped. All right, so let's jump on over to, let's take a look at the daily time frames. Because one of the things that, and this is really not a right or wrong conversation we're about to have, but it is really a matter of how it is you engage the market. So take a look at this S&P. And please, sometimes, especially when the markets are selling off, include about a year, go back about a year, minimal 6 months. It's so easy to get caught up in the market's sell-off in this mode. Looks pretty dramatic. Actually, it doesn't even look that dramatic. But move a little further out, a little further out, a little further out, till you've got about a year. Now look at that candle. Is the trend still up? May not be as strong as it was between May and the end of August. Is the market still up at the top of the range? We've seen more bearish movement than yesterday. Yesterday was, oh my gosh, sky is falling and whatever else. Please refrain from doing that because A, it's never going to serve you. B, most of the time, if you just hung on understanding the way in which you engage the market, you could sit through and get out today, but clearly at a much better price. People buy at the top, they panic buy at the top, they panic short at the bottom. That's just what people do. It's just a general human thing. We've seen far worse type bearishness. Actually, we just saw that about a month ago. We haven't seen this kind of sell-off since September, right? I mean, really, let's put it in perspective. So anytime the market begins to sell off, you're going to find out really quick, whether you knew it consciously or not, what kind of market participant you are. Again, not a right or wrong. It's just you're going to learn about yourself on days you're making money. You learn squat about yourself on days you're making money. You learn more on the days that you're losing. So if you were sitting on the losing end of some trades yesterday, I was on the losing end of some day trades yesterday. Happens, right? I really hate when people in my position never talk about losses. On days like yesterday, when the market breaks a threshold and pushes the upper end of the daily price movement range, I am almost always going to have a bottom of the range buy, and the range doesn't hold, and I get stopped out. That is the Achilles heel of the type of trading I do. Every type of trading has an Achilles heel. The sooner you find out what yours is, the better off you're going to be, and the better off you're going to be able to recognize when it's happening and just say, look, it's not my kind of day, and just brush it off. It's one of 20 trading days roughly per month, just one. So I know on days like that, they're not going to be great mornings for me in my day trades. I just move on. So what do I move on to? I move on to where we have relative outperformance. So this was a conversation we had, and you can find it here on my channel. You can that was the state of the market conversation. If you have some time, that was about a 30-minute, almost 40-minute conversation about price movement ranges and relative outperformance. All right. Now, what does that mean? That means today, I'm not necessarily interested in buying the S&P. I'll probably day trade it. I'll start to sit down with my group in about 17 minutes and look for opportunities there. I'll probably also look for potentially some day trades on the NASDAQ. We are below both the rolling 10-day and the 1 month anchored volume weighted average price right now on the NASDAQ and the S&P. On the Dow, yesterday's Dow movement was definitely by far the most outside the normal range. Now, what do you do when a market goes beyond its typical normal range? 580 points on a Monday for the Dow, about 700 points any day of the week. You know the probability of your trades are likely going to fall because we're moving outside normal parameters. Unless your trading approach is specifically designed to capitalize on abnormal action, and I don't know many people who just wait for abnormal days. Some people do. Momentum traders benefit from abnormal days, typically. But unless your trading strategy really is ideally suited to a day where the market moves beyond its typical volatility, just shut it down. Just shut it down, right? I don't know how many of you might be NHRA drag race fans. My husband and I love it. And one of the things you'll notice is when the racers get out of this, so there's two grooves, if you will. There's two areas where the rubber's been laid down, the tire rubber's been laid down. And that's where you have your grip. That's where you have your traction. And when you get out of that, you'll watch the cars just start to wiggle down the track. It's pretty scary because these things are pushing out hundreds of horsepower and moving at unbelievable speeds. You got to see it to believe it. Anyway, when they get out of the groove, when things are not where they normally need to be, they don't hit the gas. They shut it down. They just shut the motor down. Okay, I would rather just lose this particular race rather than end up in the sand trap or end up in the wall, or worse, even hurt my opponent. You shut it down. We have to learn when to shut it down. We have to learn when our trading is out of that traction groove. Okay. So today, the two types of patterns I'm looking for is either an inside day, which it looks like we're going to get, although the bell hasn't even rung and we really don't know what we're going to get. But right now it's looking like an inside day. That's the market taking a breath. It's not necessarily a precursor to, an inverse move to the back to the upside. We've seen those days too. Big down day, big up day. That's not the environment that we're in. The market that I really like, the long position most in, is the Russell, small cap. Along with that, whenever I'm usually trading small cap IWM or RTY futures, I'll also be looking at regional banks, KRE. We just have the first indication of the 3 exponential moving average crossing the 8. I'd like to see a second dot today on the regional banks. I'd like to be long both the RTY or calls in the IWM, it doesn't matter, and the KRE. A couple other individual places that I'm looking for opportunity, and these have been pretty steady for some time. SMH and the individual stocks within the SMH. Also the XLY here. Now I'm giving you a different view of the XLY here. This view is of the individual stocks that are within the XLY. And what this is showing us is the fact that all the stocks within the XLY, 1, are not all equally heavily weighted, and 2, are not in the same type of structure. Compare booking, BKNG, to Lowe's, LOW. Compare Nike to Home Depot. They're all in the same group. These are all boats in the same tide that is XLY. And you guys know the saying, rising tide raises all boats, and falling tide, lowers all boats. But while that is true, some boats are just better boats. Some boats might have a broken bilge pump. Some boats might be able to fight the tide. Powerful motor. So there are nuances. This is how you see the nuances amongst the boats that are being affected by the tide. And they're all going to be affected, but to varying degrees. Some based on weighting and sometimes based on structure. So we have actually 2 of the heavier weighted stocks within the XLY right now. Weak to choppy. That's Amazon and Home Depot. That might steer me away from XLY because Amazon and Home Depot are going to have a much higher impact on the broader sector, the XLY. But then I look at McDonald's, which I've been long in for about 8 weeks now, 6 weeks, 6 to 8 weeks now. And Nike, Lowe's, Starbucks. I don't play General Motors. No real reason I could. I just typically don't. Most of my attention's been on those 4 names: McDonald's, Nike, Lowe's, Starbucks. So when you look at the XLY and you realize Amazon and Home Depot, meh, take a look at some of the other relative outperformers. One of the things I mentioned to the traders in the rooms yesterday, and you guys might have been, a couple of you might have been in the rooms yesterday, and one of the things that I mentioned is that most of your time should be spent watch list building. I would say the Pareto principle applies. 80% of your time should be spent watch list building. I find most traders are doing something very different. They're applying their favorite strategy. They're applying their favorite secret squiggle. They're just looking at whatever everyone else is looking at, rather than looking at the question that always should precede. Rag, why do you want to trade the SMH? Why? Not what can I do to the SMH? Not what, and certainly not how. That comes later. Why? Why do I want to look at the SMH? Because it's a relative outperformer. By whatever strategy, whatever tools you use to determine that. So one of the questions here is, I haven't moved the 10-day moving. Yeah, I'll usually do it, right about now as I'm getting ready. So how do I move that 10-day moving average? So today's the 27th, so 26, 25, 24. So I'm going to go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now you'll notice it lands me on the 17th. I'm not going to anchor this to the 17th. I'll go to the next later trading day. It's the 16th. So this will be anchored now to the 16th. That's it. And that's what I'll do, every morning. If you don't do it every day and you miss a day, it's not going to break the process. It's really not. So what I need to do, and sometimes I forget, on toss, you need to save it as soon as you make any kind of changes. TradeStation, when you exit the platform, automatically saves whatever you've done settings-wise. Toss doesn't. So sometimes I'll just forget to save it. But yeah, that's all I'm looking at there. So I'll change that moving average. It's really what it is. It's a volume-weighted average price. It looks like a moving average, and we're still well below that. So I'm going to be a little cautious on SMH. I'm going to be a little cautious on the SMH. I still like the buy, but what I'm going to look at is whether or not there are any relative outperformers within the SMH that I like better than the SMH. TSM's been very good to me. Qualcomm's been quite good to me. I'm thinking about engaging Texas Instruments. And so I might look at an individual stock. However, if TSM is looking good, I think SMH should be all right. Intel's been a drag on this market, and NVIDIA is neutral. So I'm not really interested in NVIDIA, but I would not short it. And that's the process I'll go through, plucking out stocks. And I'm going to continue that right into the morning. Speaking of the morning, I'm going to have to go segue over to our chat room. So I'm going to go ahead and sign off for today. Thanks as always for joining me. I hope a little look into this process was helpful. And I will see you all tomorrow at 9 a.m. Eastern. All right, gang. Talk with you soon. Be good to each other.